Happy Friday, everyone. How are we all feeling? Yeah, I'm with you guys. I just want a nap. I just really want a nap. What do we cancel class today and just all just go home and take a nap, you know? Yeah, the problem would be is that then we'd have to move into the exam and we wouldn't have not got over our homework and everybody would be a step behind and then the exam would come up on Wednesday and then scores would not be there and yeah, then everybody say, why did you make us take a nap, Dr. Barnes? How dare you? And I'll say, but we agreed to this. And then my evaluations would suffer and just be tragedy. Dr. Caden would fire me saying I'm worthless. And then we'd have Dr. Caden teaching auditing just for a nap. That's all that would happen. It had to happen in a nap. Yeah. So yeah, can't go down that path. I'm with you guys. I really want a nap. I hope everybody can take a nap after class, get a little bit of recovery in, and but I'll probably be recording lectures. All right, before we get started, quick announcements. We have our first exam on Wednesday. The procedure for this exam follows the ones that you remember from AIS. So just a reminder, on Monday, we will have our exam review session where we will go over the study guide and we will go over the practice exam. I want to make it clear again, the study guide is very, very large. I will not go over every part of the study exam. I used to try to do that. I used to try to go over the entire study guide and then I didn't have any time for the practice exam afterwards. I will go over some very high points. I encourage you to come to class with questions if there's anything on the study guide that you need clarification on that I have not specifically discussed. That's going to be a contingent on you to do that. Then we will have our discussion go through the study guide. Then we will go through the exam and the point by point. Please complete the exam before you come to class on Monday. If you do not complete the practice exam ahead of time, you can't really get an idea of what it is that you got down and what it is that you still need to work on. That's the whole point of having the practice exam, is so that you can get a little practice in and say, oh, I think I'm good with this, or I still need to work on this. I will have office hours during the day on Tuesday, so you can come and talk to me if you have questions on the exam. I have morning office hours and the afternoon office hours, so you can come in during that time or schedule an appointment with me. And then we got the exam on Wednesday, and the exam on Wednesday will be for the entire class period. Currently right now it's 12 questions, 12 multiple choice questions, and I believe it's just one problem, but I could be wrong about that. I need to take a closer look at it. I'm still working on the problem, but I think I'm going to leave it to one problem. Regardless, the reason it's fewer questions than back in AIS, remember AIS was like 20 multiple choice questions. The multiple choice questions do take a little bit more brain power to think about. It's not just automatic check mark. You do have to think through them. So that's one of the reasons we go through the multiple choice rigmarole, that we go through the homework. But hopefully that will pay off handsomely when everybody takes the exam. We'll get 100% of multiple choice answers, multiple choice question answers on the exam, have A's across the board, and it'll be a day for celebration next Friday. That's my hope. Okay. And yeah, if we get that, then I'll be happy. I'll be happy. All right. But before we get there, we've got a very important chapter to go through the homework. So we're going to reinforce your knowledge of the information here. Hopefully this all made complete and total sense to you. And if it did, you're in great shape. If it didn't, it's time to start getting to that point where it makes complete and total sense. Question 517, which of the following procedures would an auditor most likely rely on to verify management's assertion of completeness? What is the assertion of completeness? What is that? We're trying to verify that transactions have been wonderful. I'm going to look for different adjectives. Amazing. Salubrious. What? Sorry. There's a different word for included. That you're right. It's included, but what's the word? It begins with the letter R. Recorded. Okay. Transactions have been recorded. Full stop. Okay. So what direction does completeness testing move? Top to bottom, bottom to top. I realized I said top to bottom and bottom to top, and I went the opposite direction. So bottom to top or top to bottom?
Bottom to top.
Bottom to top, okay, because that's the tracing. So we're going to be going source to records. That's the direction we need to use with our testing. So if we're going to be reviewing standard bank confirmations for indication of the cash manipulation, that doesn't seem to be a directional test, so we can ignore that. Comparing a sample of shipping documents to related sales invoices, which are generated first, shipping documents or sales invoices? Remember those business processes when we send goods out to customers, we usually send the goods out before we generate the invoices. So that would be a source document moving into a later source document. So we'd be moving up, bottom to top. So if we're actually tracing, we're going to be doing that test in B, moving that direction. Okay. So B is likely our answer, but let's go through the rest. C, observing the entries distribution of payroll checks. Okay. Why do we do that? We'd want to make sure the checks are unclaimed, but that would be not a directional test. That would just be making sure the people who have payroll checks are actually there. Then confirming a sample of recorded receivables by direct communication with the debtors. Remember we talked about confirmations. Generally speaking, when we use them for assets, we're testing existence. We can test completeness, but it's usually not our primary assertion. So the one that matches the direction we're trying to go is B, comparing a sample of shipping documents to related sales invoices. All right. Speaking of directions, in testing the existence assertion for an asset, auditor ordinarily works from the what? So if we said completeness was bottom to top, what does that mean about existence? Top to bottom, yes, okay. So if that's the case, we're going to start with the records and move down to the source documents, all right? Look at answer C. It says accounting records to supporting documents. That sure sounds a lot like what I just said, doesn't it? Yeah, that's why C is our answer. Everybody feeling good so far? All right, fantastic. Let's go on to question 521. Which of the following types of audit evidence is the least reliable? What is our mnemonic for this? AEIOU. Auditor generated evidence is at the top. Then we've got external evidence, then internal evidence, then oral evidence. Oral evidence is usually characterized by observation and inquiry. Okay. Then the U is the you know it, because that's the way Becker is. They're cheesy that way. So which one of these is going to be listed there? Let's go through each of these. Okay. Pre-number purchase order forms prepared by the entity. All right. So that's going to be internal evidence because that's something prepared by the evidence or prepared by the entity. So that's going to be fairly low in reliability, maybe not at least reliable, but let's make a note of that one. Bank statements obtained from the entity. Okay. Who generates the bank statements usually? The bank. Okay. So even though the company's had their hand signed on one, it's still external evidence. Test counts of independent or inventory performed by the auditor. That's auditor generated evidence. Okay. So that's going to be high reliability. That would be a form of reperformance, by the way, this type of test count. Okay. So that's why we consider that to be reliability. Correspondence from the entity's attorney about a litigation. Entity's attorney is a third party, is an external party. That's external evidence. Okay. So if we think that this is external evidence, this is external evidence, this is auditor generated evidence, and this is internal evidence, that leads that A is going to be our lowest reliability. Everybody understand the logic behind that? Okay, good. Moving on, question 522. Audit evidence can come in different forms with different degrees of reliability. Which of the following is the most persuasive type of evidence? Okay, same kind of concern here. We're talking about most persuasive. We're probably looking for something that was generated by the auditor. So look at B, it says computations made by the auditor. That sounds like it's really high reliability. What type of evidence do we specifically call this, by the way? We have three really high reliability types of evidence. We got inspection of tangible assets, reperformance, and then what else? Recalculation. That's what we're talking about here, recalculation. So B is going to be our answer. All right, question number 524. The assurance bucket or the assurance chipotle burrito, whichever you prefer, okay? It's filled with all the following types of evidence except for what? So remember, when we talk about evidence, we're talking about from the beginning of the time that we start gaining assurance and audit till the end, okay? What are we going to reach at that point? So what is our starting step? It's going to be risk assessment. Okay, risk assessment's not listed up here, but we would include risk assessment as one of those steps because we can gain assurance during risk assessment, getting an overall knowledge of the entity and its operations. What's the phase right after risk assessment? What do we call that one? Test of something. Test of controls. Yeah, the test that's listed up there. Test of controls. Okay. Then after test of controls, we have substantive procedures. What's the first sub-process of substantive procedures? Substantive analytical procedures, okay, where we get our overall understanding, develop expectations, and then we wrap up with substantive tests of details, substantive test of details, okay, substantive test of details. Once we get to substantive test of details, every remaining piece of assurance that we need has to be gathered at that point. We have to get everything we need after that. Once we've done that, then we issue our opinion. What document is our opinion rendered in? What do we call that? We talked about this back in chapter 1. It was a really important topic. The audit report. The audit report is where we issue our opinion. So logically speaking, before we issue the audit report, we have to have all the assurance we need. Because when the opinion is rendered, we are basing all the assurance that we already have gathered. If we gain enough assurance to say everything's fine, that's the point we reach. So the assurance bucket is going to be filled with the results of test of controls, substantive analytical procedures, test of details. We use all that assurance to generate the audit report. So that means that's external to the bucket. It's something we generate externally to that. Does that make sense to everyone? All right, cool. 525, the current file of the audit year's working paper should generally include what? So current file relates to the current period under audit, things that are relevant specifically to the current period. So these are things that are going to change pretty consistently from period to period. So if we're talking about a flow chart of the accounting system, would that be a current file item? No, it would not. That would be something we could assume is pretty consistent. Organizational charts, what do you guys think about that? Is that going to be pretty consistent? Yeah, so that'd be permanent file item. Copy of the financial statements. Would that be something that changes a lot from period to period? Yes, that's why we reissue them annually. That's going to be likely our current file item. Copy of bond and note indentures. Bonds and notes are long-term liabilities, so they're probably not going to change consistently from period to period. So those would be permanent file. So just for context, permanent file, current file, permanent file. That's how we identified it. Everybody enjoyed that one? Like, saw a lot of enthusiasm, the light in the eyes when we were talking about that. If that's the case, let's do another similar question, okay? The permanent file section of the working papers that's kept for each audit client likely contains. So in this situation, we're talking about items that do not change much from period to period. So that's what we're looking for. Review notes pertaining to questions and comments during to audit work performed. Is that a permanent file item? That sounds like a current file item. Schedule of time spent on the engagement by each individual auditor. What do you guys think? Permanent or current file? That's current file. It's current engagement, okay? Corresponds with the entity's legal counsel concerning pending litigation. Something we have to do every period, so that's probably another current file item. Narrative descriptions of the accounting system and control procedures. I think we have a winner. That's something that's probably not going to change a lot from period to period. So D is our permanent file item. All right, last question, last multiple choice question, question 529. The substantive analytical procedure known as trend analysis is best described by what? So trend analysis, had we done that before you ever walked into auditing before? Presumably you did this in your other classes. So looking at what an account, the account balance was at one point in time and seeing how it changed over time, or financial ratios, seeing how those financial ratios change over time, like gross profit percentage, okay? All of those can be examples of trend analysis. So which one of those is the best explanation of this? We have C, it says the examination and changes on account over time. Does that sound like trend analysis? Sure does. Okay, so C is our answer. All right, then I had you do problem 532 and 533. You know what? And here's the deal, guys. Here's the deal. Here's what I'm thinking. Since everybody really wants that nap, let's do them together. What do you guys say? Let's consider them all together. So here's what I'm going to do. We're going to go through each of these. And for each of these, we're going to consider the following information. Okay, so it actually says what type of evidence. That's the first thing we need to know. And then later on, it's going to identify the category of assertions. So transactions and events or account balances, and the primary assertion being tested. We're just going to do A through J, and we're going to do them all together. Now, I will tell you right now, some of these are very intuitive and straightforward. Some of these are a little bit misleading, but we'll talk about those. I will tell you that the ones that I think are intuitive and straightforward, those are the ones you should be focusing on for the exam. If I say it's misleading, it's not likely I'm going to ask a question about on the exam. All right, sending a written request to the entity's customers requesting they report the amount owed to the entity. Third-party request, what type of evidence do we call that? That's a confirmation. It's confirmation, transactions and events or account balances. Confirmation is test of account balances only. Account balances only. Because remember, we're trying to determine what is the amounts in the reported in the financial statements. Now, is it possible that we can argue that there's a transactions and events confirmation that could take place? Yes. But in every single scenario that we're going to talk about in this class, it's account balances only. There are definitely exceptions to every rule, but for the most part, we're going to say that this is account balances only. If that's the case, okay, in this particular scenario, what is going to be our primary assertion of concern for this particular test? This is occurrence, yes, because we're talking about amounts owed to the entity. So we're talking about receivables and assets. And so we're concerned about whether or not these transactions actually exist, whether these are real or fictitious accounts receivable that have been generated. Examining large sales invoices for a period of 2 days before and after year-end to determine if sales are recorded in the proper period. All right. So what type of evidence is this? It's inspection records and documents. We are looking at accounting records and we're trying to make sure the accounting records are legit, okay? So is this testing account balances or transactions and events? Yes, very good, because we're looking at individual invoices, okay? So individual invoices represent individual transactions, so they're transactions and events, which is actually fairly apparent once we determine what is the assertion that we're dealing with. What's the assertion that we're dealing with in this particular scenario in B? Cutoff, yes, we're dealing with cutoff. And remember, cutoff is only relevant to transactions and events. Okay, so you can backward engineer that if you needed to, but it was pretty obvious when we saw the words invoices. Agreeing the total of accounts receivable subsidiary ledger with the accounts receivable general ledger. All right, so this one's kind of a tricky one. So there's a couple of different ways we could go about this. All right. So if we're talking about agreeing the accounts receivable subsidiary ledger, accounts receivable general ledger, could we look at accounting records on this one? Yes, these are accounting records, so we could say that this is an inspection of records and documents. All right. Also, we could do a form of reperformance. It's not likely here, but we form a reperformance where we actually check and make sure that the amounts that are in the subsidiary ledger total up to what the amounts in the general ledger are. Keep in mind, this would probably not be classified as recalculation because it's not looking at detailed numbers and adding those numbers together. It's just aligning those numbers and making sure they're consistent with one another. But that's a little bit confusing on this. Again, this is a kind of an example of one that I would not ask this particular specific question on, but I still think it has value. As far as the category of assertion, what do we think? Is this going to be transaction events or account balances? Yeah, account balance is pretty easy on this one. Account balances on this one. Now, the assertion's a little bit tricky on this one because you see the word agreeing and you want to think VAA. And I do think VAA could be argued here. But let's think about this. What happens? How does the general ledger account generated in an information system? Does it take all of the customer accounts and consolidate those into one single account for accounts receivable? Yes, so we would say that the transactions get recorded at the subsidiary level, then are aggregated to form at the general ledger level. So if I'm moving from a lower level to a higher level, is that directional? Yeah, what do we call it when something's directional, when it moves from bottom to top? That's completeness, okay, completeness. So we could also argue completeness here. Again, this is a tricky one. I would not expect you to answer this one on the exam, but it's good for talking about it in homework. Discussing the adequacy of allowance for doubtful accounts with a credit manager. This one's a much easier one, okay? So we're talking to a manager. This is what type of evidence? Inquiry, yes, okay. And we're talking about a balance of an account. So this is probably what category assertions? What's that?
Balances.
Account balances, yes. I didn't hear it, misheard you. I was like, I thought you said something else completely different. I was like, I'm not sure where he's going with this. So, all right. And then what is our assertion that we're going to conclude in this particular situation? VAA. I want you guys to make a note of this. When you see allowance for doubtful accounts in this course, every single time in my memory that I can say that I've seen allowance doubtful accounts, it always has something to do with VAA. I'm not even talking about questions about assertions related to allowance for doubtful accounts. I'm saying if you see the words allowance for doubtful accounts, something about VAA is about to come up, okay? So I want that to be a shortcut. That's a hack for this course. When you see allowance for doubtful accounts, you should say, okay, something for VAA is going to be relevant here, okay? That makes sense too, because we're trying to make sure that there's proper valuation for the allowance that's been created for anything that's not going to be collectible. Comparing current year's gross profit percentage to the gross profit percentage for the past 4 years. What type of evidence is this? This is an analytical procedure. Okay, are we looking at transactions and events or account balances for this one? They comprised by transaction events, but gross profit itself would be an account. So we'd be talking about account balances, okay? Or it'd be comprised of 2 accounts, sales and cost of goods sold. It's a little bit misleading, but yeah. As far as gross profit percentage goes, what are we probably trying to verify here through this particular analytical procedure? Now, remember, analytical procedures can only test 2 specific assertions. Which one's the more likely assertion here? So it could test VAA or completeness. Which one are we probably trying to determine? Give you a hint. VAA is used in 90% of the cases. VAA, yeah, we're trying to determine VAA. Trying to make sure that the amount that's been recorded for gross profit percentage is consistent with that. And we're trying to determine that the valuation is correct. If it's completely different, if gross profit was like 20% for the last 4 years and then it jumped up to 35%, this would be where auditors, as an auditor, we'd say, hang on for a second. That's something we need to investigate. So that's what we'd look into. Examining a new plastic extrusion machine to help ensure the major acquisition was received. Okay, what type of evidence is this? Special of tangible assets, yes, okay. Is this going to be a transaction or account balance? Yeah, it's actually a balance. You can make an argument to the transaction, the purchase of that, but we would actually look at the purchase documentation if we were looking at the transaction itself. So probably determine if this is correctly included in the property plant equipment. And what assertion are we testing here? Existence occurrence. Remember, inspection of tangible assets can only test that one assertion, existence occurrence. Watching the entity's warehouse personnel count raw materials inventory. This is an interesting one. G and H are very interesting. So what type of evidence is this? Observation. Yeah, watching is kind of giving it away. Observation and watching kind of synonyms for one another. What are we testing? Transactions and events or account balances? Probably testing account balances because we're not looking at individual transactions. We're looking at the result of those transactions. Okay. And then which assertions can be tested here? This is interesting because it actually relates to what you did for your homework for the Earthwork Clothiers assignment. What is our most likely assertion that we're probably concerned about here? It's an asset, so probably existence occurrence. But could we say that we're testing other assertions simultaneously? Can we test completeness doing this? Yes. Okay. Can we test valuation, allocation, accuracy? Yes. We can test other assertions as well, but those are probably our primary ones. But existence occurrence, I would make argument, is the most important one. More likely that our client is going to say they have inventory that they don't actually have. All right. Performing test counts of warehouse personnel count the personnel's counts of the raw material. So here's the deal. In G, we are observing them. We're watching them do the counts themselves. Now we say, hey, I'm going to do a count that looks like fun. All right. Is it still an observation? No. What do we call this when we as the auditors are going to do the count ourselves? Reperformance. We are reperforming their task and trying to make sure we get the same results. Okay. Why is this important big deal? Because observation is low reliability. Reperformance is high reliability. Those test counts actually add a lot of assurance to what we're going to be doing. All right, still account balances, that hasn't changed. And still the assertions are going to be existence, occurrence, and completeness, and possibly valuation within the context of this. So important to note. Obtaining a letter from the entity's attorney indicating there were no lawsuits in progress against the entity. All right. What is the third party request called again? What is this type of evidence? Confirmation. Third party request is a confirmation. Are we trying to attest account balances or transactions and events? Probably account balances. We're trying to determine if liabilities were properly recorded. Okay. If that's the case, what is probably our most likely assertion? Now, there's actually two we can make an argument for here, but what's our most prominent one? If we're talking about contingent liabilities, our client probably has the incentive not to put these in the financial statements if they can all avoid it. Remember back in 303 when you talked about whether they were probably and reasonably estimable, and they have to have rules for accrual, and most companies are going to say, I don't want to record this liability if I can all admit it, because that means that I'm admitting guilt if it's a lawsuit or something like that. So what do we as auditors have to make sure they do? We have to make sure they properly record it. Okay, so that means our primary assertion is going to be completeness here. Could we make an argument that if we're talking specifically about the accrual of these contingent liabilities, that we have a concern there too? Yeah, that means that we would also be concerned about VAA as well. But if I ask you which is our primary assertion, completeness would probably be our biggest one. All right. Tracing the prices used in the entity's billing program for sales invoices to the entity's approved price list. Here's an interesting question. First and foremost, that word tracing, is it used correctly here? I do not believe it's used correctly here. We'll talk about why here in just a second. But what type of evidence is this? Inspection of records of documents. Okay, we're looking at documents that are being created by the entity system. Okay, accounting records. Okay, are we looking at transaction events or account balances? So it says sales pricing, sales invoices. So we're looking at individual transactions. Okay, so transactions and events. What do we think our assertions are here? It says tracing, so are you going to automatically say completeness? Is that where everybody went? Everybody said completeness and just threw their hands up in the air? If you threw your hands up in the air, that's not required for this course. Okay. But no, remember, when you see the word tracing, don't automatically accept that because tracing could be misused. The book likes to do that. In this scenario, they personally did. So if we're comparing to an approved price list, we're trying to make sure that the amount that's in the invoice agrees with what the vendor or what the entity has approved for a particular transaction. Means that we're trying to make sure those numbers are accurate. Yes, VAA is probably our test. Okay, likely our test there. So if it's VAA, it can't be a true tracing test because tracing is specific test to completeness. So they misused tracing here. Which again, I won't do that to you on the exams. I say that, okay, I'm going to put a disclaimer out here. I will not intentionally do that to you on exams. There was an incident about 5 years ago where I accidentally used tracing incorrectly. I'm very ashamed, okay? And it's something that's hung over my head, but by confessing it to you, I get it off my chest, okay? So I will not intentionally do it, and I will tell you if I unintentionally use tracing improperly, you guys will have only to benefit because I have to admit that I was wrong, and then you get points back, okay? So look for me to do things wrong in this course. If you can prove that I did something wrong, then I'll just be like, yep, I did. Okay, I did. All right, we got an analytical procedure coming up. What do you guys think of this analytical procedure? It's a piece of cake. No problem. Dr. Barnes came up with it. So had some information along with some assumptions. So let's go ahead and break this down. I actually prepared an Excel spreadsheet because I love Excel spreadsheets, as you all well know. All right. So we have a total of 7 games. 4 of the games followed a certain protocol, whereas there were adjustments to the other 3 games. So the first protocol was the daytime game, $24,000, or 24,000 attendance. The box seats were going to be 70% full with free seats of $500 at 12 piece. So a quantity of 16,300, giving us a total of $195,600 in this area. End zone seats, 20%, and then those are $8, 20% of the capacity that's there. So 4,800 times the $8 is 38,400. And then the upper deck seats are the remaining 10%. Those are $5, $2,400 each. So basically, we get $246,000 for a single game. We'll multiply it times 4 games. We'd expect $984,000 in revenue for those daytime games. Which that would have been plenty right there, just to say, let's just do the revenue analytic after that, and let's just move on with our lives. But the book said, you know what? We don't think you work hard enough as a Truman student. So let's go ahead and add 3 different scenarios in here that you have to consider. Now, the good news is if you did this Excel, you could just copy this down and make the adjustments. So nationally ranked opponent, that's actually going to be an increase of 3% or 30%. So 24,000 times 1.3 is 31,200. They increased the prices. The prices were increased by 20%. So $14.40, $9.60 is $6. And the percentages stay the same. Free seats stay the same. So you end up getting a total of $385,920 for this game. Then the in-state rival, where things get really wonky, because then you have an increase of 20%. But the way they broke it down is they said that it's going to be 24,000 for the home team, and then 48,000 for the visitor, 4,800, excuse me. 75% of those are box seats, 25% are upper deck, which means that you have to actually split that out, 3,600 seats for the box seats, and then 1,200 for upper deck, and just add those on there. So you use basically the same breakdown as you would up here, but then you add 3,600 down here to quantity, and you add 1,200 down here, and you get 295,200. All right. Then finally, the evening game attendance is much lower. It's actually 5% lower, 22,800. They increased the price to make up for that. So they increased the price by 10%. Something that I had not done because in old versions, they didn't actually specify whether this applied to the 500 free seats in old versions of the exam or the book. And the new version of the book was 2021. And it took me like 2 years to update. It actually specifically says in the new version of the book that this applies, that 5% reduction applies to the 500 seats as well. So I had arguments with students in prior years, and they said, no, it should be 475 seats. Dr. Barnes said, no, you're wrong. It doesn't say it in the book. And then they showed me in the book, it does say it. So yeah, I was wrong again. Again, you only benefit when you prove me wrong. You only benefit when you prove me wrong. So adding these all together, $257,070, you get a grand total of $1,922,000, $190. All right, so that's our expectation. That's our expectation. Going back to the problem. It's going to, it goes through all the information in the detail, and then it says the reported ticket revenue was $2,200,000. What do you guys think here? Are we comfortable with this revenue analytic? Is this close enough? What is always our question? What is always our answer to every question in this class? It depends, okay? What does it depend on? It depends on what our tolerable difference is. So this is the amount that we expect. This is the amount that was reported, okay? So how close do they need to be? Well, 2,200,000 times 0.05. They need to be within $110,000 of each other. Are they in fact within 110,000? No, they're about $300,000 apart, okay? So as an auditor, what does this mean for us? What does this mean for us moving forward? It means that we cannot accept this as an appropriate approximation of revenue, and it means that we need to investigate further. Now, the question itself says, develop your expectation, determine whether or not it's warranted, and what evidence could you actually gather to verify your explanations. So in this particular situation, would we think that we probably would not be able to rely on this anyway? And I guess that's a really bad question. I should preface this. Is revenue an important account to many organizations? I would say to most, especially those profit generating organizations, even not-for-profit, you could even make an argument, revenue is an important account, meaning that we probably could not restrict our testing of revenue just to one analytical procedure. That being said, if we got exactly right, if we got the exact number, that would give us a lot more assurance, but we're way off here. We're within the realm of 5%. What does that tell us about the nature of an analytical procedure in this particular area? I have seen many situations where companies have developed revenue analytic procedures, but these are usually developed for high level expectations and trying to investigate where they want to focus their efforts on. But as a tool for developing an estimate and saying, we are going to accept this as our estimate for revenue in this area, does it seem like this is appropriate? Are there a lot of things that could affect expectations for revenues other than that this is a ridiculously complex model, by the way. The whole purpose of this was to show how ridiculous, very complex this was, and we still weren't even close. We still weren't even in the ballpark, which is kind of funny since a football game. All right. But yeah, that's a big case. So then the final question asks, under what condition would a substantive analytical procedure likely be effective in a situation such as the described in this problem? And the answer is, more generally, it's probably not going to be effective in this situation. We would want to reserve analytical procedures in situations where we can identify almost all, if not all, of the critical estimate criteria. So what were the examples that I said that we'd use analytical procedures for? What was the example that we used on Wednesday? Calculating interest expense. Could we do the same thing for interest revenue? Yeah, revenue works the same way. If we're talking about interest, it's based on investments that we own, or I should say, bank account interest that we generate. What were some of the others that I talked about? I said allowance for doubtful accounts. Do you guys remember doing your aging for accounts receivable back in 302? So 0 to 30 days, 31 to 60 days, 61 to 90 days. Is that ringing a bell? If I show that to you now, would you feel like, oh, okay, that seems pretty stale. If I know the percentages, I can calculate what I believe is uncollectible. Can we do that as auditors too? Yes, the good news is auditors have been trained in financial accounting, so we got those ideas. Depreciation. What do you guys think about depreciation? It's like, how many of you prefer makers over any other depreciation? Okay, filthy tax people. Yeah, that's okay. No, I'm joking. Obviously, I'm joking. Modified accelerated cost recovery system. I can't even call it depreciation. Can't even call it depreciation. Yeah. So yeah, we actually know if we have the information that are the inputs for the calculation of depreciation, we can make a very good estimate. So there's a lot of scenarios where we can use analytical procedures very effectively to develop an estimate. This just doesn't happen to be one of those. Which I guess that leads to an interesting conclusion is that I made you do this homework and then it spent the last 10 minutes talking about, and we have no result to show for it. But we learned as part of the process. It was all about learning. Okay. So that's the initiative. All right. Last part of the assignment. We've got our earthware clothiers assignment. Okay. So let's go ahead and pull this up. So we've got two work papers. And it describes the information in the summary of this, but basically we're doing inventory testing in two warehouses. And if you look, the header on the work papers, by the way, here's the information about documentation. Remember that header I was talking about? Okay, here's our header. This would also be included as part of the header here. What is this 5.1 again? What do we talk about that? We talked about it on Wednesday. What do we call that? That's an index. Okay, that's an index. And 5.2 would be another index. We would actually refer back to where we do testing. This would be able to be cross-referenced. And we don't really have any tick marks in here, but we could have tick marks in the work papers as well. All right. So in the header, it says inventory floor to sheet. And then the next one says inventory sheet to floor. Now, this is a silly question, but we do need to delineate the distinction. So is there a difference between these two work papers? Obviously there is, otherwise we wouldn't have it, okay? But what is the distinction? What is the difference? That's the important thing that we need to determine, okay? So let's think about where we start our testing as the auditor. If we say floor to sheet, we're going to go onto the warehouse floor. We're going to look at the quantity tags that have been counted. and we're going to take that information and go and compare that to what is in the system. So the sheet is basically recorded amounts from the information system. So we were moving from floor to a system, okay, or source to record. What direction is that? Source to record. I did my arm that direction in a very specific way. Bottom to top, okay? So we're primarily testing which assertion if we're testing floor to sheet. We're tracing, but what is the assertion associated with it? Tracing is a test of completeness. Good, good, all right. Now, let's think about this, flip it around. We start with the sheet. We look and see what was recorded in the system. We get those numbers and we go march out to the warehouse and we see what was counted and compare those numbers. Starting with the record, moving to the source, okay? So we're going from record to source. What direction are we moving? Top to bottom, okay? So that's vouching, okay? Which is a test of distance occurrence, okay? Now hold that in mind because we got a few, I've got to spin, I'm going to throw a little bit of a curveball at you here in just a second. But let's go ahead and do our comparison. And for another semester in a row, I forgot to put down the answers here. I've got this set spreadsheet, but I don't have the numbers here. But I think I could pull them up, you know. So let's see. We're at the Germany warehouse, so we can actually look at the inventory count tags. So Germany got the medium sweater and the photo 11 by 17. So I'm not going to fill this one out. If I remember this correctly, this one's correct. Okay, both the quantities match. Is that, am I correct in that statement? I could ask that question for everybody. Everybody could nod their head. So yeah, Dr. Martins, yeah. I know that there's an issue here. There's an issue here, right? So if I go to the count tags, I'm going to look for the photo 11 by 17. Oh, where is it? Okay. It says right up here, photo 11 by 17. 9734. Okay, 9734. Everybody agree with that? Close this one. I'm just going to get confused having multiple. Then if I go and look that up on the status report, which is basically our sheet, the document of information that comes from the system, and try to find this here, there's a 0 right there. So what is that telling me? What is that telling me? Well, it's saying that if I go out to the warehouse, I've got 9,734 photo frames out there, or photos, I'm assuming photo frames. They're not photos of just random stuff, but photo frames sitting out there. But if I go and look at the system has no record of these items. So these items did not get what? They did not get recorded, which is a violation of everybody see the logic here? Okay. Now, let's make a really important distinction. When I say they did not get recorded, am I saying they did not get recorded properly or they did not get recorded at all? They did not get recorded at all, which is an important distinction to make. Why? Because we're going to jump down here to the Japan warehouse and we're looking at medium sweaters. Okay. Medium sweater here. So it says 9687. Does everybody agree with that? I'm getting old in my old age, so I could transpose numbers very quickly. If I go to the medium sweaters here, to the Japan warehouse, I got 9678. Those are not the same number. So there's a difference of 9. What is likely to happen here? What is the most likely, the easiest solution here? Yeah, transposition of numbers, okay? So let me ask a different question. It's the same question I asked above, but probably a different answer. Is this the same scenario? The transaction did not get recorded at all? No, it got recorded, but it did not get recorded for the correct amount. This is a violation of VAA accuracy. It was not recorded accurately, okay? So we're just going to put VAA here. Now the numbers that match, there's obviously no issue. I remember, if I remember correctly, it's 11 by 17, those numbers match, correct? Okay. And then if I jump over here, let's go ahead and look. I believe it says it brief, actually Germany is no problems. Is that correct? Okay. Then we go down here, large t-shirt. I believe that's the issue one. That's how long I've been doing this. I remember exactly which ones are misstated now because I've been doing this so long. So let's go to the large t-shirt in the Japanese warehouse and oops, I need to start. I guess that's a first all the mistake. Okay, let's try this again. Because we start here from the sheet. Okay, that's what this started for. So 2342. This is what's in the record. And part of the reason that I needed to do that, because when I go over here, I'm going to look for large t-shirt, and I'm not going to see large t-shirt listed here. Somebody walked down on the warehouse floor, tried to count the t-shirts and said, there are no large t-shirts here. Other than the one that I'm wearing, there's no large t-shirts here. All right. So something got recorded. It does not exist. Okay. Exist. So in this particular situation, you got 0 E/O. And those, if I remember correctly, those are our only differences, right? Let's talk about one more scenario before we depart, just a hypothetical, okay? So in this particular situation, we're just testing the inventory counts. We're doing that at that point in time. So what if, for example, here, I'm just going to make up numbers, but 1, 2, 3, 7. Let's have I have that on my inventory status report, and then I put 1, 2, 7, 3 is the actual count. So we have another transposition error similar to the one that would occurred in the previous tab. All right. Is that again going to be a VAA error? A VAA error? Yes, because it looks like it was recorded, and these items do exist, just not in the same quantity that's been recorded. So that's something we're going to look out for when we're doing this testing. Even though the goal of this sheet to floor and floor to sheet testing is to test those two specific assertions, completeness here, existence here, we can possibly detect VAA errors if the amounts are misrecorded. If they exist, or if they were recorded, they were just recorded at incorrect amounts. Okay, so that's important distinction to make. Last important point to make. Are there any other assertions that we might be able to identify just doing this test? The answer is it's a little bit dubious, okay? Because you will notice that we're just counting at a point in time. But what if I was given the transaction information for the last 2 days before the end of the year, as well as the 2 days before after period end, and I was trying to test and see if they've all been received? If I was comparing those to actual transaction information and trying to see if that information was on the warehouse floor, what would I be testing in that scenario? What assertion? Cutoff, okay? I would be testing cutoff of transactions. Now, I can't test cutoff with the information that's given here in this particular document because I don't know when these items were received, when the transaction dates are. Remember, cutoff is that it was recorded in the proper period. Is it possible to do that as part of the inventory count? Absolutely, but we would need more detailed information to do that. That being said, I'm going to caution you right now. I do think that this is a very, very valuable procedure right here, and understanding the difference between source to record and record to source, I should say, understanding the difference between floor to sheet and sheet to floor is a really important distinction to make, okay? There's a very high likelihood there will be some sort of question on your exam that will relate back to this, so please make sure you understand the difference. Once you get it down, I do not think it's particularly difficult to understand, and the good news is that information stays with you, but you do need to make sure you have that understanding solid. All right, with that, I think we're done for today. So we will be here for the exam review on Monday. Please make sure you complete the exam in advance. See y'all then.